Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts, T.S. Harrier of HRBV Client Solutions, Vineeta Sharma of Narnolia Financial Advisors, and market expert Shahina Mukaddam join me on the show. Thank you to all of my guests for joining me on the show. Today on Hot Money, we'll discuss the specialty sector in detail. A lot of stocks are doing extremely well. Voltas as well as Bata are doing well. Will the rally continue is something that we're asking. And if you look at Sun TV for the past 9 years, December is the month it's never given a loss. So can it break the jinx and this time around rally around? So that's the question that we're asking. But let's start with the first one. Specialty chemicals as a space has been doing extremely well. You're seeing counters like Vineeta Organics do well. GHCL has managed to move up. Gujarat Fluoro has managed to move up. So the entire space is vast. Lots of other stocks in the space. But we want to discuss this space, what's working for this space, and if you're betting on this space, which is a stock that you have to bet on, that's something that we're asking. Okay, so Hari, I'll start with you. Do you like this space, and if yes, what are the stocks that look good to you in this space?
Yeah, we like this space because see, ever since China put those restrictions on manufacture, there has been a big, the issue of pricing, etc. As far as Indian markets are concerned, I think that has got resolved. So that has been a positive as far as specialty chemicals are concerned. Now, within the space, the stock that we like is actually Nosil, and the reason we like Nosil is actually expanding its capacity in tune with the increased demand that they're anticipating. So they've just about taken up a 425 crore massive expansion plan, and the good thing is it is entirely being funded by internal accruals. So no debt, no increase in leverage, nothing. It's purely by internal accruals. And also we need to remember that Nosil has an asset turnover ratio of about 2.1. So I think an expansion of 425 crores would directly mean a proportionate impact on sales and on profits. Even in valuation terms, I think among the specialty chemical companies, Nosil still seems to be fairly valued. So we believe that Nosil probably at the current price of about 165, 170 would be a good stock to accumulate in the space.
Give us more details on how the financial performance of Nosil has been over the past few years. Has it been outperforming? What exactly has been it doing, and how are the margins compared to the other sector peers?
No, margins wise, I think Nosil is probably at par, slightly lower than some of the others. But I think what is really working for them is the shift that is happening, because where a lot of these specialty chemicals companies got stuck was that the demand was not picking up due to the capacity of China to dump these stocks at fairly low prices. But I think with China getting a lot more environment conscious, I think the days for Indian companies is going to be much brighter now. They're having huge global markets, and that is what I think is going to drive Nosil from these levels.
Okay, so Nosil is the first stock that we are speaking about. What about you, Vineeta? Which are the stocks? Are you all recommending specialty chemicals to your clients? And if yes, which are the stocks that look good to you?
So specialty chemicals, we are liking Pind Limited, and PI Industries. If we see the whole agrochemical, global agrochemical was not performing from 2013 to 17 because of lot of issues, some climatic conditions, as well as there was a lot of inventory piled up earlier. So, and from later half in 2018, we are seeing some kind of a revival as inventories are already low. But then, so as far as the top line goes, we are expecting PI Industries to report good numbers, because the CSM, they have good connections with the client, and they are most trusted partners for global innovators. And on the domestic side, they have launched some 2 new products lately in the last quarter, some 5 products in the last year, and 2 of its product, like I think so all related to paddy. So all of them are doing pretty well. So even on the domestic front, one concern is that they have lost little bit on the margin front. And in fact, overall specialty chemical, I would just like to point out, since most of the companies in India, they are coming up with a lot of capacities. So over 5 years, we're doubling capacities. For most of the companies, you'll hear that. And lately, what has happened, the supply disruption from China is expected to, somehow fade off. So going forward, with China environmental issues, now China has also relaxed that a little bit, and it's given the states, different states at power to decide as to what the environmental and pollution control would be. So some capacities from China would come back. Okay. So at this valuation, the growth is still there. We can can see some growth. But then on the valuation front, we are expecting that most of them are on the higher side. So if you take a overall look, we need to be very cautious as to regarding the growth and valuation. And for Pind, definitely volume growth for 20% upside, and it looks like, from 2019, it should give a turnaround again in the top line and margins.
Valuation-wise compared
Valuation, definitely it's because if you compare the peers, say Dhanuka or insecticides, but then there are very different. PI Industries is a little different because of the kind of the business segregation, and they're more trusted partners up. And plus, as in, if you look at the products, even on the domestic side, they have more of branded. So 65% products are branded, which gives more revenue and obviously increased margin. So it has a better margin profile other than its peers. And so I think at 25-26 times FY20, it will give a good headroom for somebody who wants to accumulate.
You all have official coverage on PI Industries,
yeah, we have.
And what's the target that you have?
Around, I think it should be around, I don't know, remember the current price, should be 15% upside.
Okay, 15% potential upside in PI Industries. Shaina, what about you? Do you like the specialty chemical space, and if yes, which are the stocks that you like in this space?
Yeah, I think specialty chemicals has been doing well and will continue to do well. I go with both the panelists' view that because of restraints from China in terms of production, the Indian industry for specialty chemicals is definitely doing much better. Also, I prefer in this space, I would prefer to go with Himadri because Himadri has actually is operating in a very niche carbon black space. There I think there are fewer players, and while in terms of volumes we have seen in the last quarter, as we saw in the last quarter, the growth that we had seen say in the last year has sort of tapered off.
Okay.
So volumes, let us assume their track record was, let's say, 95,000 tons per quarter. So against that they have done, say, around 92,000, close to 92,000 tons. So the volumes have come down. Despite this, the prices, the realizations, average realizations have remained pretty strong. So that has enabled them, despite slightly lower revenues, to report a very healthy profit growth. And I think this is likely to continue over the medium to longer term. In addition, I prefer this stock because they are investing almost about 600 crores to add capacity in the carbon black space. Across the carbon black plus special carbon black, they are investing, they are expanding capacity by almost 80,000 tons.
Okay.
And with an asset turnover ratio of about 1.5 times, I believe this will definitely add to their profitability over the longer term, because the capacity will come on stream in the first quarter or maybe in the mid to 2020. But here I think it should add and be considerably EPS accretive, because the debt equity ratio currently, I mean, the balance sheet is very strong.
Okay.
So the 600 crores will be funded easily by them and supported. The debt equity is extremely low as of now. So all in all, I think given the good valuations, if I was to talk about numbers and valuations for 2020, I would believe, even if you don't include a lot of this capacity into the numbers, would be closer to about 8 to 9 rupees.
What's the key risk if someone invests in Himadri? What are the key risk factors?
I think we've seen it's like I would say, cyclical industry to an extent.
Yeah.
And I would just hope that the cycle doesn't, absolutely turn negative in 2020 when the capacity comes on stream.
Okay.
So that is the key risk. We've seen it happening, but what I've also seen is that when it does well, it makes such bumper profits that, it sort of is able to manage this volatility.
Okay, so that's the view that's coming in on the specialty chemical space. Nosil, PI Industries, as well as Himadri Chemicals are the stocks that were discussed. The next stock that we want to talk about is Voltas. Of late has been doing rather well for itself. It's gained significantly, but will the rally continue? Today it's down almost 1.3%, but what's the view on Voltas going ahead? We'll ask our guest. It's up 9% in the last 6 months, but overall on the last 12-month basis is down almost 10% in trade. Do you all track Voltas, and what are you all recommending your clients on Voltas?
So Voltas, if it's an excellent brand franchise, and recent development, so we can segregate Voltas into three parts. One is the UCP segment, and which is doing pretty good, and one problem that they have been facing into this is the cost of because they are importing products from outside.
Yeah.
So that's, but then there the company has guided that they will do more of the indoor unit. They will be manufacturing, either they will give it to local players,
Yeah.
and that should save on some cost, and there is huge competition in that segment. So pricing will be a little issue going forward, so that the margin on that particular segment they're trying to save on is through internal or localization. The second segment is the EMP. So in the EMP segment, the order book is around 4,800 crore, and even on the domestic as well as international, things are moving. Even domestic, the kind of growth that we are forecasting going forward, I think EMP should keep on contributing to the top line. Recently, Voltas Beko has come up, and management is out. They are screaming for a good some 10,000 crore of revenues by 2025. So that looks good, and definitely right now the plant is not ready. So they are importing right now, and then later on, once the plant is ready, they will be manufacturing in India. So that's a whole thing for Voltas. Given if you compare it with the different players, I think Voltas, the kind of even on the international segment or the domestic segment, the kind of brand presence it has made, even for the EMPs, the way it has executed projects earlier and all, I think it stands a chance. But valuation, I'm not very comfortable as in. So I would not say it's a screaming buy right now. We have a price target of around 630 for the company.
Okay, what about you, Hari? What's your view on Voltas?
See, we like it, but I think at the current price of around 575, 580, I would believe most of the short-term or I would say the medium-term positives appear to be already priced into the stock. And if you really look at a stock in that particular space, we would believe that something like Havells, which has both an equipment franchise as well as a white goods franchise, I think that would be a much better bet compared to Voltas. So obviously, I think Voltas, our immediate view is that probably the stock has limited upsides, and we would prefer something like a Havells over Voltas at this price.
What are the concerns for Voltas that you have?
See, one, I think we believe that growth going ahead could be much slower on Voltas compared to Havells. So Havells, I think, could have a better growth. And also in terms of product spread, we believe that Havells has a better product spread compared to Voltas. So I think that should probably work against Voltas.
Okay, that's the view that's coming in on Voltas. Shaina, what's your view on Voltas?
To take the conversation forward from where Hariharan has mentioned Havells, I think the big competition that is coming in for the cooling business of Voltas is coming in from the very aggressive launch of the Lloyd segment of products from the Havells basket, which is putting pressure both in terms of the realizations. So while white goods remain a good growth area for the overall economy, I think the competition is keeping the prices upward movement and prices subdued. On the other hand, the cost of raw materials has gone up, and with so much competition coming in and the big discounts that are being offered, I think it is going to be difficult for Voltas to maintain its EBITDA margins over the next couple of quarters. We are already seeing the beginning of that in the last quarter. I see that continuing. So we are going to see depressed margins and competition coming in on the top line also. And lastly, as Vineeta was mentioning, valuations are pretty aggressive at 26 times. I wouldn't say it's very expensive compared to the rest of the pack, but at the same time, I would say that the growth now becoming more subdued. I would be neutral on the stock.
So even would that mean for the sector also that you would have a cautious view, given the fact that parameters that you spoke about would apply to all the other players also in the sector?
Yeah, I would believe that the sector is going to see some pressure. At the same time, I personally hold Havells, and the reason I bought Havells was that the Lloyd business that they are launching, that they are becoming aggressive now on, is an add-on business for them. So the volumes are only going to look higher because the base of Lloyd's was low. So to that extent, I would prefer, as Hari was mentioning, a business where you have two segments. One with one segment of business which is growing, which is brand building and going to be the I would say the future growth driver, and an existing business which is actually the bread and butter.
Yeah, Hari, just wanted to comment on that. Concerns would always be Havells is no cheap stock. It's one of the most expensive stocks, and competition, as she pointed out, would play out on oil. And for Havells to come out in the air conditioned segment and challenge Voltas, it would be an uphill task at this point of time. So is that not a concern on Havells also?
No, I think Darshan, what we are betting on is that post GST, there is a gradual shift that is happening from the unorganized to the organized. Now the question is, who is going to get the largest slice of this unorganized space? And what we understand is that Havells actually seems to be making. See, Havells' distribution network is far superior to that of Voltas, and I think that is where probably Voltas would lose out to Havells. In that Havells is a very good distribution network. If you look at any wholesaler, any retailer, they would definitely have Havells products. So I think where Havells is probably going to gain is that the distribution is much stronger. So when the actual shift in market happens in a bigger way from unorganized to organized, I think that is the point where you will find the gap between Havells and Voltas widening a lot more.
Okay, that's the view that's coming in. Just wanted to address the flash. Kotak Mahindra Bank requests RBI not to take any action against the bank. RBI lawyer says Kotak Mahindra Bank tried to act smart. So this actually is a big issue. You're going up against the central bank. Any view on Kotak Bank, just of this thing? But whatever has been done has been done. What's your view on Kotak Bank?
Now again, see, forget about what is happening. We like the bank, we like their margins.
We spoke about it in the last and we discussed that, is it a good move to go against the RBI?
See, I don't know. I think a lot of problems that banks like Yes Bank and Kotak Bank had was the previous governor. Now with the governor gone, I would probably believe that it should be, more of, I would say, a compromise arrangement between the RBI and the banks. So my hunch is things should get resolved. To me, it was largely a problem with the RBI governor. Now that governor is history, so I think that should automatically get resolved now.
Okay, but that's pretty strong comments that coming in from RBI. Okay, Jan 17th is the next time the case will be heard. So Kotak Mahindra Bank down almost 1% in trade. Let's start again with hot money. The next stock that we want to talk about is Sun TV. It's been a marked underperformer of late. Nothing negative is coming in, but nevertheless the counter does not seem to perform. It's up marginally in today's trade, but the trend is in their side in December. If you take a look at what happened in the last 9 years, December is the year they've always given positive returns. Will that jinx break this time around? It's down 40% in the last 12 months. Shaina, what's gone wrong for Sun TV? Any idea why is it lagging so much?
Yeah, I think one is, if you see their content cost, it is increasing, and this is putting a pressure on their margins. So instead of what we used to say that with digitalization, you're going to have better margins, better ARPUs, etc. That is not really showing up for Sun TV. So to that extent, the analyst community is continuously downgrading their earnings estimates, which is what I think is keeping the stock in pressure. Secondly, while they are adding channels. So yes, that would be a positive if you're looking at a medium to longer term, where you have better advertising revenues, you'll have hopefully better subscriptions. But in the near term, it is going to likely to put a pressure on their balance sheet, because the costs are actually moving up both on the revenue side in terms of content, as well as the capex is increasing quite rapidly. So, and it's always been a politically connected sort of story. So really, long-term investors would sort of stay away. The other stories in the space which you could really look at.
So would you play a Z over Sun or any other story? What do you mean by which stocks would be? If someone has to play the media play, if not Sun, what should they play? Z?
In fact, I hold Z, I hold TV18, and I hold TV Today, right? But if you ask me today, Z was my first purchase. It's not given me any return in the last, of course, it's like 10 years, so I have got a return, but if you see in the last 3 years and odd, it's been non-performing. The latest addition that I've had is a TV18.
Okay.
And there I think it's been stable, but I think the opportunity out there in the news space is quite good. because you have a very good app that they have developed. I really like the money control app. I think when that is monetized, it could be a big upside. And I also like the way they're expanding, you know, across in terms of their offerings in terms of the content. So, and the strong, of course, not to forget the strong promoter. So, who can actually absorb the ups and downs. We've seen this happening. We've seen a number of channels being sold, you know, in the last couple of, I would say 3 to 5 years. So, some of them shut down, especially in business. So, I like it first because of the promoter, 2 because of their the development of their app, and 3 because of the content that they offer. But the longest holding that I have is in TV Today, and there I think it's going to be one of a very good performer, because there also you've got a strong promoter that's come in. Okay, and there I think they're doing pretty well in their news channel space, both Hindi as well as English. So I would be invested in, my preference would be first for TV Today if I'm buying today. TV Today, and then you have TV 18, because the stock has corrected a lot and it looks like it will take some time to rebound, and last Z.
Okay.
But I would avoid Sun.
What about you? Would you all have coverage on Sun TV, and what are you recommending?
Sun TV, we do not have a formal full active coverage on the stock, and what I could understand through past performances, I have seen that the company has lost some market share, good amount of some 10% market share that they have lost in the last 6 months. Also because of some connectivity and some pricing issue with one of the cable operators there. And the ad revenue has gone down by 10%. Subscriber base has increased, and that has been because of the digitization that is happening on Tamil Nadu, and there the growth still persists. But overall, if you ask me as to, you know, in this segment, because it's, I think the whole industry is going into some kind of a transformation phase. And in this, I'm not able to clearly foresee as to how Sun TV is placing itself. It is still in talks with some of the tele companies to get itself, you know, as subscriber for Sun Next, which is the digital side. And they have launched some one more channel, I think Sun Live. And I think overall, you know, the growth is not very clear to me, considering the market share losing by the company. So I'm not able to forecast. Definitely, it's if you look at the valuations, it is at its historical lows. But then if the kind of growth it's not able to give, certainly there will be pressure on the return ratios.
Okay, that's the view that's coming on Sun TV. Hari, what's your view on Sun TV?
No, we like it, especially considering that the stock is down about 50% from the peak levels. You know, we believe that the downside risk at these prices can't be too much. So we would definitely be buying Sun TV at these levels. I think a couple of points. See, let's not forget that Sun TV has still been a south-based operator, and it is really not moved national like you know, Z or somebody else. So it is still a south-based operator, and South remains one of the largest, fastest growing, and also the most lucrative television market. And Sun is again diversified. They have got broadcasting, they have got DTH, so they have got everything under one banner. They probably need to gradually start monetizing. But I think the point that Shaina made in the beginning, that it's very politically sensitive stock, is probably what really drives the prices. For example, you know, ever since Kalaignar passed away, I remember the stock has been on a downtrend, because it is so closely linked to the fortunes of the DMK party in Karnataka. And you know, the way the DMK is probably coming back, the way they are making national noises, the way the alternative is kind of imploding, I would believe that the political scenario may actually suit Sun TV in the days going ahead. Again, it's speculative, but I think for a change in the next 2-3 years, we may see the political scenario suiting them, and that should be positive for the stock.
Okay, that's the view that's coming in on Sun TV. And the final stock, I'll start with you only, Hari. What's your view on Bata?
Oh, we like Bata. In fact, we like the entire footwear space, especially after the GST was tweaked to favor, you know, both the sub-category and the above category of footwear. So I think Bata definitely has been making rapid strides in the last probably few quarters, and you know, we like it as a footwear space, and we also believe that you know, in terms of the real estate bank that they have, it is still to be fully monetized. So once that happens, then we could get a much better valuation. In terms of price, the stock is still I think way below its peak. So in valuation terms, there is, yes, a a comfort for a consumer stock. So yes, as a footwear play and as a hidden real estate play, we would be looking at buying this stock.
Okay, Shaina, very quickly, I think we're running out of time. What's your view on Bata?
I have a positive view on Bata. I was very positively surprised to see the numbers, almost 15% top line revenue growth with a 30% PAT growth, new initiatives for new product launches, new stores to be rolled out, improving the customer satisfaction. The focus is on customer satisfaction now and the new launches. So I think all things are working positive for Bata. Strong brand, strong franchisee network. I think I like the stock with a medium to longer term.
Okay, will it be a third thumbs up, Vineeta?
So we're liking Bata as such in the segment of branded products and stuff. But then at this point of time, I think Bata is trading around 49 times FY20 expected EPS, and which I find a little costly. We can get some room on the downside, and definitely there is no reason, on the growth side or on the business side that we need to doubt, because it has aggressive plans of launching more stores, and the way they are categorizing on the premiumization of the products. So some 35% premium products will be launched. 50% of the whole top line comes from 500 to 1,000 range. So it's categorized to all kind of customers. So I think it's good story, but not at this point of time. 49 times PE, I think is a little overvalued for the company.
Okay, so I think that's the view that we are getting in on Bata at this point of time. Two of our guests like the counter, and Vineeta does believe. You think Bata is overvalued? Do you like footwear stocks as such?
See, the problem is most of these consumer stocks are, I would say, a little overvalued. But I think as long as they can maintain 15 to 20% growth, and as long as the comfort of a land bank is there with Bata, I would believe that at 45 plus times it's probably justified. And I don't know of any good consumer stock that will really get in the market at below that valuation. So I wouldn't worry too much. Yeah, if valuation goes beyond 60, I think it's a matter of concern. But I think if they're able to show growth in the next 2 or 3 quarters, I would be quite comfortable with the.
Okay, that's the view that's coming in on Bata. But that, thank you so much, Hari. Thank you so much, Vineeta. Thank you so much, Shahina, for coming us and joining us. I believe we have the phoner on Kotak Mahindra Bank. The Bombay High Court has refused to grant any interim relief to Kotak Mahindra Bank, which has challenged the RBI's directive mandating the promoter to cut stake in the country. Ridhima Saxena, who's been tracking the case very closely, joins us with all the details. Ridhima, fill in with what exactly happened today.
So it was a very short hearing, and it was heard by a bench of Justice B.P. Dharmadhikari and Vijay Kumar Kotwal, who held that since RBI is a responsible regulatory body, it will not grant Kotak any interim relief on the August 13 letter of the Reserve Bank of India, which said that Kotak will have to reduce its promoter shareholding to 20% as percentage of its paid-up voting equity capital and not paid-up capital, in order to not concentrate the voting rights within the promoter's hands. So that was held by Bombay High Court. Also, what the Bombay High Court said was that since there is no interim release, the matter will be heard again on 17 January when RBI's response will also be filed.
Okay, Ridhima, thank you so much. We'll now watch out for what happens on the 17th of January to determine what exactly goes on in this case. But with that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to BloombergQuint.